Well, welcome back to the Metals Company's channel, developing the world's largest estimated resource of metals required for the electric vehicle future and low carbon energy transition. Here, joining us to discuss, we have Craig, the CFO, as always, to take us through a high-level overview of the investor deck today. Welcome, sir.
Hey, good to see you again.
Always a pleasure to get you on. So I'm going to hand it over to you to kind of just give this visual presentation.
Yeah, it was great having the intro call last time, and happy to dive a little bit deeper into this resource that is the world's largest estimated undeveloped source of battery metals. And what you're looking at on this first page is 3,000 tons of polymetallic nodules in the hold of the Hidden Gem vessel after our successful pilot collection test in late 2022. So what I'll take you through is the fact that this resource is very large. It's very high grade, which means the economics are attractive, but also the environmental impacts are relatively lower. We've proven our offshore collection technology. We've proven our onshore processing technology and have partners, both offshore and onshore, to help us get into production in a capital-light manner. So really, so many de-risking elements have occurred in the last couple of years, and now we are targeting first commercial production in the first quarter of 2026. So in terms of metals and mining, this is a large, high-grade, valuable resource whose commercialization is right around the corner. Now, these nodules that I talked about are sitting unattached on top of the seafloor in the Pacific Ocean. So a lot of people hear deep sea mining and they have perhaps a misperception about what it is. There is no digging, there is no blasting, there is no drilling. But why go to the seafloor in the first place? Well, the short answer is because that's where most of the planet's nickel and cobalt and manganese is. In fact, the Clarion-Clipperton Zone of the Pacific Ocean was estimated by the US Geological Survey in 2020 and then 2021 to have more nickel, cobalt, and manganese just in this little patch of seafloor than all land-based reserves combined. And what does that patch of seafloor look like? Well, this is actually video from our Nori D area for the first block that we're developing. That block has an initial assessment that is SEC compliant, signed off by AMC consultants, noting a present value in 2021 of $6.8 billion. And that's on about 22% of our total resource. So this patch, you can see, has very densely packed together rocks that contain nickel, copper, cobalt, and manganese, all critical metals for the clean transition. And these rocks can really be picked up much like golf balls in a driving range because they are not attached tightly to the seafloor. So it is a very, very different paradigm than traditional land-based mining. Polymetallic means that multiple metals, you have 4 metals in one resource. You can replace multiple mines that will be required on land for the same amount of metal. Being very far offshore is also advantageous because you're not in anybody's backyard. There is no real impact on people or physical impacts for local communities. These are very deep. It's over 4,000 meters below the surface, and that means it's very dark. That also means there's no plant life. So taking a step back, if you had to locate a resource of this size and quality needed to fight climate change, this is about as good as you could get, given the fact that you're far away from any local communities, but also far away from most animals, and certainly no plant life sitting there on the seafloor. And that's because it is very deep and very dark. And again, the polymetallic nodules aren't attached, so it's more of a collecting exercise than it is mining. And importantly, we can take these nodules to places on land where the infrastructure already exists to process them. In fact, we have a partnership with Pacific Metals in Japan to do the initial processing at an existing rotary kiln electric arc furnace facility. And that flow sheet that we've developed would produce no tailings, nearly zero solid waste, and we use nearly the entirety of the nodule mass to turn into usable products. But what kind of products could we be producing? Well, as you see on this page, the composition of these nodules is very well suited for electric vehicle batteries. If you look at the makeup in terms of contained metal value, the manganese, nickel, and cobalt and copper line up quite nicely with the NMC 811 chemistry mix. Now, certainly we're not solely dependent on electric vehicle demand for this story to work. We would be a low-cost producer because you have 4 metals in one resource. So that means even if, let's say, EV demand estimates end up being a little bit too optimistic, we're still going to be a low-cost producer of these 4 metals, and that puts us in a great position to survive across any commodity cycle with very robust free cash flow margins. Now, in terms of how many EVs, for example, could we put on the road? We have, within our contract areas, Nori and Tamil, an estimated in situ quantity of nickel, copper, cobalt, and manganese, which is equivalent to the requirements of 280 million electric vehicle batteries. That would be the equivalent of the entire US passenger vehicle fleet. So right now, the United States has to effectively import all of its nickel and cobalt and manganese, other than one small mine in northern Michigan, which is running towards the end of its life. We could take the United States from total dependence on imports to total metal independence. similar to the hard-fought energy independence that the US has experienced in recent years. It would be a shame for the US to trade energy independence for metal dependence, mainly from areas like China and Russia. These are the countries that control most of the world's nickel supply. Nickel, which would represent nearly half of our future revenue, these are markets dominated by China and Russia. TMC represents a major antidote to that. We have a very large resource ranked in 2022 and 2023 as the largest and second largest nickel projects on Earth. But I would also focus your attention on the bottom of this page, nickel equivalent grade. Pulling all of our metals together into nickel equivalent, we are somewhere around 10 times higher grade than some of the other undeveloped projects in North America. So that puts us in a very good position. In fact, if you stack us up versus many other publicly traded nickel developers, we have a resource that is so high grade and so large that allows us to compete with some of the lower cost, higher ESG impact supply that is coming from Indonesia, which of course is funded by China. Importantly, this is where the resource exists. This is the Clarion-Clipperton Zone of the Pacific Ocean. It is between Mexico and Hawaii. And it's this patch of seafloor where near 90% of all exploration dollars have been spent over the course of really the last 60 years. In fact, over $2 billion of exploration expenses have been spent by various contractors and over 300 research campaigns since the 1960s. So let's take a step back. This isn't some completely new idea. This isn't some completely new technology. The technology to do this has been around for a very long time. In fact, it was companies like BP, Shell, Lockheed Martin, Sumitomo, Mitsubishi, US Steel. They were all out in the Clarion-Clipperton Zone, this patch of seafloor, in the 1970s, collecting nodules successfully. The problem was there was no international agreement on who owned the oceans. There wasn't any concept of the UN Convention of the Law of the Sea. So because this resource was in international waters, it stayed undeveloped, while other resources like offshore oil and gas within territorial waters began to develop. But the technology is very similar. The technology is proven then. What we now have is major progress on the regulatory front, which we anticipate is going to lead to adoption of the rules that allow deep sea mining to go forward commercially next year. And we would be the first contractor in international waters to begin production very shortly thereafter, expected in the first quarter of 2026. So what we have here are the yellow, the blue, and the red patches. Those are TMC's exploration contract areas. And we've identified a resource in the yellow and blue areas in Oriental of 1.6 billion tons of polymetallic nodules. And these nodules might trade in the ballpark of $400 per ton in terms of the contained revenue post-processing. So you get a sense for what the revenue potential is. So you're over $500 billion. And in fact, you may have seen that there were calls from various politicians, military leaders, including Hillary Clinton, Leon Panetta, and 350 others who want the US to join the International Seabed Authority that is regulating this industry such that the US can get access to mine sites that are, quote, worth $1 trillion each. So we are talking an order of magnitude higher than the value one would expect for a typical mining project on land. One important thing too, I mean, this is getting a lot more focus in the popular media. One of the first reasons that a lot of our stakeholders and frankly, some of our employees heard about this company was back in 2019 when 60 Minutes did a piece aboard our vessel as we were doing a research expedition in the Clarion-Clipperton Zone. They followed up on that piece just about 10 days ago and wanted to check in on what has been happening and also what is the geopolitical discourse on this issue. And it's really more about US and Western powers versus China in the race for critical metals. Well, over that time period, it's important to look back and see what TMC has accomplished to de-risk this project. We now have 2 resource statements that are both Canadian and SEC compliant. We've done our offshore test mining that has been completed. I'll show you a quick video of what that looks like. We did our onshore test processing. In fact, we proved out our flow sheet in Canada at one of Glencore's facilities. And now we have a partner in Japan to help us process those nodules at no capex to TMC. Finally, we finished the last of 22 offshore research campaigns. And those research campaigns have told us how big the resource is, but also what are the environmental impacts of collecting these nodules off of the seafloor. The takeaway is, in our view, this is the lowest impact potential source of nickel, copper, and cobalt. And that's actually been backed up by life cycle analysis performed by Benchmark Minerals, looking at the relative impacts, whether it's carbon emissions, deforestation, waste, tailings, these nodules come out on top. You've also seen quite a bit of focus from other sources in the media. CNBC actually did an interview with the Secretary General of the International Seabed Authority, and his quote was that this industry is now inevitable. You had a Washington Post piece late last year, which noted, of course, that TMC was in a leadership role in this position, but China wants to catch up as quickly as they can. And that's actually drawn out a lot of focus from the US and others who want to slow down what could be another growing lead for China when it comes to critical minerals. The Economist has now been putting out multiple pieces on how they're in favor of this resource. You even had the Breakthrough Institute, ocean scientists come out, Seaver Wang, and note in February of this year that he, as an ocean scientist, thinks this is the best thing to do to protect the planet by actually taking advantage of the resource laying on top of the seafloor. And that's also the point of view echoed by director James Cameron, who's probably spent more time on the seafloor than almost anybody else in his submersibles. And his view is, yeah, there's thousands of miles of nothing but clay. Of course, we should be picking up these nodules as opposed to the rainforest, which is where most nickel is currently coming from. And then finally, I did mention that there were a lot of politicians pushing for this in the United States. You also have a bill in the US House of Representatives to provide diplomatic and financial support for polymetallic nodule collection, processing, and refining. A contractor like TMC that has such a large head start in this industry could be the beneficiary of that kind of funding. So I might stop there, see if you have any other questions before I can dive a little bit further into the actual collection technology. But this might be a good place to see if there's anything that you'd like to dive into any further.
No, but I think it's relatively incredible about the asset size, and yeah, there's just a whole lot going on here, especially with the comparable when you're talking about the EVs that you're able to supply some of these precious metals for. But I'd like to see the continuation of where you got this one.
Yeah, you got it. Look, I'm looking at right now. What we have on the screen here is the drill ship that was used in late 2022 to pick up over 3,000 tons and lift over 3,000 tons of these nodules to the surface. So we've talked about how big the resource is. We've talked about some of the geopolitical tailwinds, and now there are many others who are trying to get into this space as well. TMC has been doing work in this contract area since 2011. So we really do have a major head start, and we're the only company since the 1970s to actually lift these nodules off the seafloor. We're the only company that is now on the precipice of finishing our environmental impact statement, and we have two SEC compliant and Canadian 43101 compliant resource statements within our contract areas. So those are things that separate TMC and why we feel we are going to be the first ones to commercialize this, alongside our partner Allseas. Allseas is a nearly 20% shareholder in TMC. They are a Dutch offshore pipe and cable laying company used to working in the deep ocean, and they purchased this vessel from Petrobras in 2020 and have now repurposed it for our exclusive use for the collection of polymetallic nodules. What we'll see in this video here is the collection test in late 2022. You'll see this very large vehicle being launched off the side. This is the robotic vehicle, unmanned, controlled from the vessel on the surface, that goes down over 4,000 meters, dropped into the water here. It is then reconnected to a riser pipe, similar to what you would have in offshore oil and gas. The difference being you don't then have to drill into the seafloor. The pipe is connected via flexible umbilical cord to this vehicle. So you're going along collecting these nodules, and they ride up on compressed air on this riser pipe to the vessel on the surface. From there, they are transferred to a bulk carrier, and this is what the nodules look like on deck. What you're looking at now is 86 tons per hour production rate. We're going to step that up to roughly 400 tons per hour alongside Allseas with various modifications we're making to that vessel. Those modifications include adding a second collector vehicle, making each vehicle a bit bigger, adding more collector heads, adding a wider diameter riser pipe, adding a more powerful compressor spread. So these modifications are occurring over the next couple of years, getting us ready for commercial production. But I would say there aren't any showstoppers in those modifications. They're all things that our engineering partners at Allseas feel are well in hand. And again, we've done 22 campaigns to measure the environmental impacts at sea. And what we're finding is that the impacts are far smaller than initially expected. We are putting all sorts of amazing assets in the water. And actually, we're in the water during that test that I just showed you to measure what is the environment before collection, during, and after collection. And what we found is that some of the impacts, such as, let's say, the seafloor plume, that's the dust cloud that gets kicked up when you pick up some of these nodules off of the seafloor. Previous speculation has been that, well, what happens if that dust cloud gets caught up in ocean currents, and it could disrupt tuna or whales or anything close to the surface. I think a lot of people forget, as we see on the previous page, this is how deep we are. Here's the vessel on the surface, and then 4,000 meters, that's a long way to go. And most fish and mammals aren't diving below 1,000 meters. So you have a very large buffer here where there's just not a lot of life. And what you see is actually a plume that stays very close to the seafloor. The dust cloud only rises, the vast majority of it, 1 to 2 meters above the seafloor before the particles flocculate together and fall back down. In fact, as you see from this model from DHI, when we did our collection tests, most of the plume, if it were freshwater, would actually be good enough to drink. It's very, very low sedimentation, and that means the impacts on the local communities are also quite low. Finally, I'll go rapid fire through some of the rest of this, but this is the team in Japan, Pacific Metals, on which we have a binding agreement to process the nodules from our vessel for initial operations. And importantly, we're using an existing facility. Typically on land, you have to build out new facilities close to where the ore body is. Here, we can take the nodules off the seafloor and bring it to the existing infrastructure. So this allows us to ramp up in a very capital-light manner. And in fact, the flow sheet to produce some of the battery materials that we've been talking about has also been proven. And just last month, we produced the first ever nickel sulfate, a key component in battery cathodes, from polymetallic nodules. And it looks like mint ice cream. I wouldn't eat it, but we are going to be producing the strawberry version in terms of cobalt sulfate very soon as well. Importantly, I also mentioned that the relative environmental impacts per ton of metal versus land-based mining are quite a bit lower. In fact, Benchmark, one of the blue chip research firms in this space, came out with this analysis and in 2023 laid out what are the impacts of collecting nodules off the seafloor compared to most known paths for getting nickel and copper and cobalt on land. What they found is that for nickel and copper, every single impact category they measured, nodules from our NORI-D area were the lowest in every single category. So that's a pretty important statement. And if you're just looking at CO2 per ton on the chart on the top of this page, you'll see that we would reduce the CO2 per ton of metal for nickel by over 90% versus equivalent sources in Indonesia. So the regulator, the International Seabed Authority, is rounding the third base on getting the final regulations into place. They have a legal mandate to do so. They must deliver those regulations. And as you see on the lower left of this page, they must do so in part because we've given notice to them that we're going to be ready to submit our application. And whether or not they finalize the rules end of this year, early next year, there's a bit of a buffer there. So long as the rules are finalized prior to us beginning commercial production at the first quarter of 2026, that lines up with our timeline because we do not have to wait for them to finalize the rules before we launch our application, which they would then have to review over a 1-year period. So we feel very confident that after July of this year, we're going to be in a position to launch our application to be the first polymetallic nodule collection company in international waters. And we believe we have roughly a 5-year head start on the next behind us. And importantly, let's talk about the economics here. We believe this is going to be very profitable across all commodity cycles because you have 4 metals in one resource. In fact, AMC Consultants arrived at a net present value of roughly $7 billion in 2021, and that's just on our first block, what we call NORI Area D. That first block is 22% of the resource. So if you're excluding the other 78% of our resource, just on that block alone, we're trading at about 7% of the underlying net present value. That is far lower than where we would be trading for the same asset on land. Now, certainly people are less used to this resource, so you might say some modest discount is justified. I would say eventually it should be a premium because we are higher grade, we are going to be more profitable, and this is almost infinitely scalable given the fact that we don't have to continue to build out infrastructure for each new block that we go to. So I view this as a very scalable resource that is very valuable, and yet right now we're effectively trading at option value on what is the world's largest and second largest nickel project, with a head start on something that is continuing to see winds blow in its favor. So it's a very good time to do work on us, and I think I'll stop there and turn it back over to you.
Yeah, no, I definitely appreciate all the insights, and we'll ask the viewers to let us know what you think in that comment section below so we can perhaps do a follow-up Q&A. But on that note, as the news and catalysts continue to hit the wire, of course, we're going to bring it to you here. But on that note, as always, we look forward to catching you in the next one.